I hope all of you can hear me. Hello everyone, good evening. Welcome to this webinar. I hope all of you can hear my voice and see my screen. Before we start, please note that Killertrader is not a SEBI registered analyst and all the information in this webinar is only for your learning purposes and is not intended for any trading purposes. So as financial markets are very risky in nature, please consult a registered financial advisor before participating in the markets. Today's webinar is being held post markets only to give a indicative learning of certain methodologies used to understand the markets and to expand your learning about it. Now, let's start. The first topic on today's agenda is volume profiles. So let's see how many of you are familiar with volume profiles. How many of you have already used volume profiles? If you have any questions, please mention it in the chat group. I will be taking individual questions at the end. In the meanwhile, we'll try to answer all your questions that you will be posting on the chat. Uh, So most of you are already familiar with price-based analysis, and most of you used various indicators to decode the markets from a price-based perspective. But apart from price, there is also another important element of analysis called as volumes. Now, why exactly are volumes important for a trader? The reason why volumes are important is because it's volumes are what actually drives the price. Volumes are the basics. Volumes are the core concept of supply and demand analysis for you. Because if there are more volumes on a particular side, let's say on the buy side, you call it that there is a lot more demand for this security than supply, and vice versa. And the entire aspect of a particular stock moving up or down is the game of volumes, because volumes is what controls these moves. Now, there are multiple ways to understand volume analysis in the markets. There are multiple tools that a trader can use to decode volumes, but the most important of them belong to a category called as order flow analysis. One part of understanding this order flow analysis is the use of a tool called as volume profile. Now, why exactly is volume profile one of the most important tools? Because this helps you understand volume from a price perspective. I repeat, this helps you understand volumes from a price perspective. Most of you are familiar with looking at volumes through a time perspective. This indicator, for example, let me remove bar statistics. You see this volume indicator. This is something that most of you are familiar about, something that's available in every platform. But one of the main drawbacks of using this tool is that it doesn't talk about volumes at price. For example, right now I am on Bank Nifty futures 15 minutes charts. I am seeing the volumes that are traded on a 15-minute basis in these particular bars. If I go to 5 minutes chart, this is my 5 minutes time frame. Now I'm seeing the volumes that are being traded on a 5 minute basis. But ultimately, I am trading price. I'm not trading time here. I want to understand volumes that are being transacted, volumes that are coming and going out of the markets at a particular price level, because that is how I will understand whether a particular price zone is important or not. I don't want to see where in which 5 minutes candle did the highest volumes come in or not, because time is arbitrary. You use 5 minutes, I use 15 minutes, someone else uses 1 hour, someone else is trading on a 1 week time frame there for you. So to address this challenge, if you want to address this challenge, then instead of using the regular volume tool which is available at least for day trading, you will need to move one step higher and start using a tool called as volume profile. So if you go to study and go charting and go to order flow, here you will see that there are two options called as volume profile tick and just volume profile. I for day trading, especially for day trading and short-term positional trading over, let's say, a week to a month's time frame. If you are planning to hold positions for a week to a month, then you can use volume profile tick for your analysis. If you are if you want to look at the candle bars of, let's say, more than a day's time frame, a week's time frame, a month's time frame candles, for example, monthly candles or weekly candles, then you don't go with the tick option. Now, in this case, you are seeing that certain bars are colored in a certain way, and some of these bars at certain points are longer and wider than the others. So if you notice, instead of seeing your volume tools to the lower end of the candle here, you are seeing them to the side here. So what does this indicate? These bars tell me what is the volume that is transacted at a particular price level. For example, in this case, this is my price level of 47.0110 to 47.015. Now, price visited, price came to this area 7, 8, 9 times during the day. Let's say, for example, on a 5 minutes candle, 1, 2, 3, 4, 5, 6, 7, 8, 9, and 10 times. Now, it doesn't matter how many times price visited this area. The job of volume profile is not to look at when did price visit this or how many times price visited this, but to show every time when price came to this particular point of 47.0110 to 47.030, for example, what are the volumes that are being traded? Are we seeing a lot of volumes or are we seeing very less volumes? What does this mean? What does this imply? That is what volume profile tells you. So far clear or any questions? All good? Anyone, any queries so far? Now, right now, since this is time frame agnostic, that is, right now, there is no implication whether you use this tool on a 5 minutes or a 3 minutes or a 15 minutes candle. Uh, what is the frequency for which you want to see the volumes at a particular price? For example, in this case, this particular area was tested by the price 47,0110 to 47,030, 47,030, 10 times in one day. This volume profile tool that I'm saying forms on a day-to-day basis. That is, I want to see on an everyday basis from 9:15 to 3:30 what kind of volumes are coming in and going out of the market at each price point. And I want to see this on a daily basis. I don't want to see this on a weekly basis or a monthly basis or a yearly basis. So that is where your settings come into picture. So if I go to volume profile tick, here I'm seeing multiple options. For example, if I choose daily, I'm seeing one profile on a daily basis. I see each profile representing a day. If I go to weekly, then I will see each profile on a weekly basis. If I go to monthly, then I will see on a monthly basis. For the purpose of our analysis, I primarily like to work with daily profiles and use weekly profiles for a higher time frame analysis, which we'll discuss some other time. Now, so as day traders, your daily profile is very important. Now, when you open the settings, you see certain settings of value area, orientation, format volume, like extend POC lines, extend value area lines, etc. etc. Now let's talk about the most important settings here. So you understood what is a volume profile, what does a volume profile show. Now, do you think that at every price point during a day, the market opens at 9:15 and closes at 3:30? So basically from 9:15 to 3:30, do you think the volumes will remain the same throughout the day? No, they don't. Certain price points will see a higher volume, certain price points will see a lower volume because it depends on the interest of the participants, market participants. And at certain price areas, you will see that more buyers are entering. At certain price areas, you are saying that less buyers are entering or no volumes are coming in at that location. It depends on multiple reasons. Now we can get into that reasons later. There are a lot of reasons, but we focus on two or three why this happens. But since the volumes that come in and go out of the markets from morning till evening is not uniform, you will see that certain areas there are higher volumes indicating higher interest of the market participants. At certain areas there are lower volumes which indicate lower reduced interest of the market participants for you there. Now, to understand this, to understand and differentiate between these areas of higher interest and lower interest, higher volume coming in and lower volume coming in, we use something called as value area. That is the area where there is a lot of interest of market participants transacting in higher volumes, thereby creating something called as value. This area is called as a value area. The standard settings of value area are 70 or 68. Now, why is this 70 or 68? Because this is based on Bell's curve of statistical distribution. That is, Bell's curve of theory tells you that there is a 168% probability of a one standard deviation move. That is the reason why the standard setting of your value area, volume profile value area is 68 or 70. It's precisely 68.2. Some use 68, some use 70. No harm, no foul, whatever you use out of the two. within the center area. So now the yellow part is my value area, which is that the yellow part on a daily basis, you see this yellow every day, right? This is where 68% of the highest volumes of the day are transacted for you. For example, this was your area for yesterday. This was your area for 30th of November. Now, within this place, within this value area, the point where the largest volume is transacted is called as your POC or point of control, which is marked in red. Now, POC on an individual basis is useless for you. Just looking at POC will not give you anything. But if you combine value area plus point of control, then that will give you a very deep insight and excellent understanding into the structure of the markets. Basically, what kind of markets are we trading in, and does is there a higher probability of the market to go up or come down, and if it goes up, is it going to be smooth or not? So there are multiple insights that a market participant can basically derive from using volume profile in this value area plus POC. Now, for a particular day, for a particular day, just a moment, you have your value area, you have your POC. The lower side of your volume profile is called as your value area low, and the higher side of your volume profile value area is called as your value area high. Now, these are very important pointers, but on any given day, say we opened here, for example, today we are moving down. This is only 3 bars into the day, that is 9:15 bar. We are on a 5 minutes time frame, 9:20 bar and 9:25 bar. So within these 3 bars, how can you understand the market movement with the volumes of just 3 candles into the open? You can't. That's the reason. That's the reason why we as traders primarily on any particular day work with the previous day's value area for the first half of the session. That is until at least 12:30 to 1 p.m. You don't look at the current day's value area, but you all focus on the previous day's value area. Clear? Anyone, any questions? So on a daily basis, until for the first half of my day, that is till 12:30 to 1 p.m., until at least 1 p.m. For example, today until 1 p.m. Don't look at the current day's profile. Don't look at the current day's profile, but focus more on the previous day's profile, because the market at in the open, the market has just opened, and you can't rely on the volumes of the first 3 candles on a particular day and then decide what kind of positions you want to take, or what kind of analysis you want to do just based on 3 candles into the trade. It's not fair to you, it's not fair for the markets. So focus on the volume profile of the previous day, because every session, whatever happens today, there are market participants from yesterday who are coming in, who already have positions built. So let's identify the previous day's value area. So just a moment. Now, the first and the foremost aspect is to change your settings. You go to settings and you go to order flow. So for Bank Nifty, right now the standard settings I use is 100 block, and lot size you may or may not format your choice. For Nifty, I use a tick size of 40 to 60. It's not 100 lot, it is 100 ticks, which means 5 points. That's I want to look at my volume data, volumetric data for every 5 points. These are my own, based on my own personal calculations, which I tend to change based on the market volatility, the range of the markets. An alternate to this on how to identify and set your tick size is to base it on the ATR, average true range of the markets. Now there is already a recording on this. I will share it with you at the end of the session so that you can watch and learn how to share your standard tick size. Now let's mark the volume profile value areas. The first thing that I do at the start of every week is that, or the end of previous week, say on a Sunday for my coming week's session, what I do is I use my 15 minutes volume profile. I use my 15 minutes bars and volume profile of the previous week, and I mark my value area extremes and my point of control on a weekly basis. First thing I do is do this on a weekly basis. Now, once when I'm done with it, the next thing I do is I check if the markets are opening within my previous week's range. The first thing, that is, this is my previous week, for example, until 1st of December, Friday. So this is this current week from Monday, 4th of December. So is the price, is the stock or the index opening within my previous week's range or in my current week's range or in my new range? In this case, we are opening in a new range due to the election result. There's a good positive news flowing in. We are trading at all-time highs, but we don't trade at all-time highs all the time. If you are trading at all-time highs, then there is a different way you need to look at it. Or, but let's say that we are trading within the, for your understanding purpose, we are trading within the range of the previous week. Now, this is, for example, on 28th of November, we opened and within the previous week's range, and we are trading with it. Identify where did the market close and what is your, where is your value area, for example. That is, in this case on Friday, the markets closed somewhere to the upside and your value area is also to the upside. So this tells you that along with the movement of price to the upside, there is also higher volume present in this area. That's what your value area basically talks about. Now, if you see an up move from there, there is a good possibility, there is a good possibility that the markets can continue to move up from here. Clear? It doesn't mean the markets will definitely move up. There is a higher possibility that the markets will continue to move up from here. If the price is closing at on a particular side to the either to the extreme upside or to the extreme downside, and your value area is also present in the same direction. In this case, for example. So this shows you that apart from this particular up move, there is also interest from a volume based perspective to the upside. So there, when you see that the market is breaking crucial levels like previous week's value area high, then these are the kind of breakouts I personally like to chase. I don't like to chase every breakout. For example, on the same day, on in the same week, if my value area was here and the market is breaking out this way, this is not a breakout I would like to chase. I would rather wait for the markets to pull back to the downside, where I will look to buy at support than chase a breakout. Now, if the market is trading beyond previous week's range, then you have no other option than to rely on the previous day's volume profiles. For example, look at this. On 30th of November, we opened around previous day's high. This is on this day, on Wednesday, that is at 325. We closed right at the highs. What did we discuss just some time back? That if price is closing at the highs and your value area is also to the upside, a breakout from here, there is a higher possibility. But right at open, we started coming down. Price took resistance at your value area high. As I said, you need to mark your value area high and your POC here. This is your previous day's value area high, and this is your POC. So price did not accept above previous day's value area high and then started coming down immediately, which shows that at this point when price is unable to move through a higher volume area where there is an up move, where there is an up move, then there is a higher possibility that it can start coming down. This is a continuous chart, wrong analysis on first days of series. See, for building a broader context of using volume profile, you can use a continuous chart. Only when you are looking at the micro aspects of it, say for example, you want to look at footprints, you want to look at order flow and imbalances, then you need to look at that current series chart in the first 2 to 3 days of the series, and in the last week of monthly expiry, you need to switch to the next month's series. Clear? Now, go to any day, go to any day, you will see that the previous day's value area markers are very good points from where price moves can come. That is, there is a good chance you can see price accepting at a previous day's value area high or low, or if you see that there is a breakout or a breakdown from the previous day's value area levels, the markets tend to give a good enough move. What we until we discussed that if price closes at the extreme upper end and then say value area is also to the upside, then if there is a breakout, the key is that the next day the markets should give a successful breakout. If the markets give a successful breakout, there is a higher chance that the markets can trend to the upside. Now, let's say that the same thing happens on the opposite side. That is, right now the markets are very bullish. Let's say that on any given day, for example, take this day, the markets are moving down, closing at the lower end, and your value area is also to the lower end. Value area is also to the lower side. Then, if the market gives a breakdown from here, then there is a good chance that this is the kind of a breakdown that will sustain or give a strong down move. On some days, you will see that the value area profiles are not to the upside, extreme upside, or to the downside, or but instead they are right in between this way. These are symmetrical profiles. That is, these are also called as your balance profiles. What does balance profile mean? Balance profile means consolidation in this case. That is, price went nowhere during the day, you can see, and the profile is also right in between. When you see that the previous day's profile is balanced, then you will never chase a breakout or a breakdown. I repeat, you will never chase a breakout or a breakdown until price holds above the previous day high or low. Your game plan should always be to trade at pullbacks. Clear? That is, if price is testing a lower boundary, you a trader should focus on being long. Enter at pullbacks. If price is testing the upper boundary, a trader should focus on taking a short position because there is a good chance that the market can pull back until price trades above previous day's high or low. Do not chase breakouts or breakdowns. Anyone, any questions? Now let me address a few questions. How to draw levels using volume profile? That is exactly what we are discussing. Can we make strategies based on this on a weekly basis? Am I right? See, there is a certain purpose for every tool that you use in your analysis, right? There is no one single magic tool that is going to give you help you understand about market structure, give you entries, give targets, and talk about risk reward. Each indicator or each tool has a different purpose, and the primary purpose of volume profile is for you to understand the structure of the markets. Understanding structure does not equal taking an entry or focusing on targets. The first step for you as a if you want to become a professional trader is to understand what kind of markets are we trading in. Are we trading in a markets where there is a higher chance that breakouts will sustain, or are we trading in a markets that is going to move this way, the where you can take entries at pullbacks? This is what volume profile will help you understand. If you want to understand more, what is the next step after using volume profiles? Let's say that you use volume profile and you understand structure. What is the next step for you to take entries? Now, once you understand structures or market context using volume profiles, then you focus on footprint charts. That is when you focus on footprint charts, your order flow charts, to take entries, to look for those good locations where you can take entry based on the orders coming in, which will give you a very good risk reward. Clear, Dinesh? What is the use of POC with value area? That's a good question. Let me answer that. See, POC on an individual basis doesn't give you much information. But let's say that you combine it with value area, for example, on any particular day, for example, where is it? Let me show you. In this case, your closing is to the extreme lower end, to the downside after a down move, and your value area is also to the downside. If your POC is also to the lower end of the structure, now this is your point one, the closing, the value area is point two. These two things are indicating to you that there is a higher chance that if the market breaks down, breaks today's lows, there is a higher chance the market can continue to trend to the downside. When you look at POC, that is, what does POC mean? POC is the single price point where the highest volumes during this session have been transacted. Now, when the biggest positions or the biggest volumes of a day are also present to the downside, in this case, this acts as a third point of confirmation for you. But if you just look at POC, that's not going to help you out. I hope that answers your question. What's the use of value area if we are going to take day high and day low for breakouts? Only on balanced days you look at, if the previous day's profile structure is this way balanced, that is when you look for a previous day's high and a previous day's low play. You wait for market to trade below that to actually take a position, or else you focus on value areas. tick size, someone says that you can set based on your preference. Now, what exactly is tick size? Tick size is nothing but we because we are looking at volume based data. For how many points frequency do you want to see the volumes? That is tick size. And the standard way to look at it is using ATR. Now, anyone else? Any other questions? No? All right. Then we'll move on to the next topic. Is there any backtest based on this? This is not a mechanical tool where you say that, all right, I want to sell both a call and a put at so and so time, or I want to sell both a call and a put for 50 rupees premium or 30 rupees premium and wait till expiry. No, it's not something that you do day in and day out, just like a robot punching numbers. You need to have a certain understanding based on the markets. Volume profile doesn't tell you to buy or sell. Volume profile gives you data. How you plan to use that data depends on your own understanding of it. If someone's understanding is good and they are using it from quite some time, your understanding will only get good if you learn and use it for quite some time, not overnight. If that happens, then you can use volume profile and you will get very good results with it. If your understanding is not good, you don't want to spend time with it, then volume profile will not work out for you. Why not weekly chart series from series wise based on expiry? Amit, since we are looking at the data set of 5 days here, adjusting one day here and there does not matter. We have an expiry every day, and there is a very large constituents overlap between these indices. See, the heavyweights of Nifty, for example, HDFC Bank is a heavyweight in Nifty. It's also a heavyweight in Bank Nifty for you there. ICICI Bank, for example, HDFC Bank or heavyweights not just in Bank Nifty, but they are also heavyweights in Fin Nifty. So when there are when there is a good amount of stocks, when there are a good amount of common stocks between all these indices, then it really doesn't matter if you use a series wise chart or if you use a standard weekly chart. That minor change that you see honestly doesn't matter. Difference between volume and market profile. Volume profile is primarily focuses on volume and price. Market profile focuses on time and price. I personally prefer using volume profile wherever volume is available. Now, let's talk about order flow search. I've been getting a lot of questions the last few days about order flow search. Order flow search is my own proprietary data analysis tool, which is built on volumetric data, order flow, volume profile, and based on certain proprietary settings. The primary job of order flow search tool is to track abnormal institutional activity in the markets. Looking at volumes, it can be understood whether a particular size, an order size, or a particular way the orders are flowing into the markets is being deployed by individual traders or institutions. Taking certain principles into consideration, order flow search is built, which helps a person track abnormal institutional activity. So institutions usually tend to build positions before a large move or a reversal starts. That is, you will see a simple candlestick, but a lot of things goes in the background in that simple candlestick. And I don't just mean it from a footprint analysis perspective. Even sometimes it's not even visible in plain footprint charts, because when I talk about the markets, when I talk about, say, let me open a chart. Does it mean volume spike, Harsha? No, it's not about volume spike. So for example, let me go to imbalance chart. Now, footprint charts helps a trader understand, for example, the volumes that are coming in at a particular price level. Now, this talks about the volumes coming in at a particular price level, and also what are the volumes that have come in the previous time price visited this level. For example, let me show you. Let us say let us say that a large number of buyers came in at 44,390 at 120 on 16th of November. So when I see this price area breaking, I know that the previous time a large buyers have come in, and right now if price breaks, they are going to exit their positions, leading to a big down move. This is just an example. I'm not saying a large buyers came here, an example. This is what footprint charts basically tells you. It talks about the volume activity on a real time basis, and you can compare it with what happened previously. But order flow search compares the institutional volume activity whenever it occurs on a particular candle basis. So let us say inside a candle, if this is your 5 minutes candle, for what kind of buyers are coming in, what kind of sellers are coming in, is there a large volume flow, not on an individual basis, but is there a large sell side volume coming in, which has overpowered the buying volume in this particular candle? That is, if this candle's open is at 945 to 950, it tracks all these aspects through this 5 minutes time frame of what exactly has happened, and not just within this candle basis, but also with X look back period, and helps a trader identify those particular areas and helps a trader identify those particular bars where a certain large player is putting a lot of pressure on a particular side, either after a particular move where they're absorbing, or before a big move starts. This is what order flow search mainly talks about. You can also use order flow search to identify high of the day and low of the day areas. That is, if the market has printed high of the day or low of the day areas. And this is a data analysis tool which can easily be used complementing any other methods that a person is individually using. Let's start with Bank Nifty, for example. Let me remove everything else. Now, when you go to FX and study, go to order flow, you will see order flow search here. You will see order flow search here. This is available for everyone right now. Click on it. Okay. So when you first click on it, this is how most traders charts would usually be. The first thing that you need to do, the first thing that you need to do is, once you put on order flow search, go to order flow settings. The block size should be 1. If you are using footprint charts or volume profile, then it will change. So if you want to look at order flow search, open a separate chart. Don't put both your volume profile and order flow search on the same chart. Don't put your order footprint charts and order flow search on the same chart, because you need to use a block size of 1 if you are using order flow search. Clear? You will not use a block size of 100 or 60 or 50. You need to use a block size of 1. Clear? Then the next step is to go to format volume. If this is off, turn it on. Make sure it is turned on, and the lot size should be the right lot size for the instrument. What is the lot size of Bank Nifty? You enter that. If you are tracking it on Nifty futures, you track it. you enter the lot size of Nifty futures. But this is something that you can save individual templates and use it. If this goes wrong, the entire analysis will go south and it will go really, really bad. Okay, it's very important that you set the auto mode should be off, block size should be 1, and lot size should be 15. Anyone else? Any other questions? And then you turn off the spike. There are, when you click on the settings, there are two options, surge and spike. You can give it any color that you want. You turn off spike and you turn on surge. Clear? Just a moment, let me refresh this chart. Just a moment, guys. Now, so this is how your chart will look once you put the right settings. It will take a few seconds to load. Format volume 15, the lot size, block size is 1, and you apply order flow search. The first thing that you need to do is turn off spike. Spike is for a completely different reason. Present, it is for those scalpers who like to trade on 1 minute, 1 minute, for example. Okay, so now you are seeing certain bars that are highlighted. Clear? You are seeing certain bars that are being highlighted. Now, how do you use these bars, or what exactly does this information tell you? I'm using a 5 minutes time frame here. Okay, whenever I see a surge activity being marked in a particular bar, I first need to wait for the bar to close. As I said, it takes into consideration all the buying and selling activity that is happening in a candle, and looks at certain patterns in it, and looks at certain pressure of buyers over sellers and sellers over buyers, etc. At 9:51, you can't jump into a conclusion taking looking at the order flow surge of 950 bar, for example. You need to wait for the 950 bar to close, which closes at 9:55, 9:54 for 59 seconds, and at 9:55 a new bar opens. So when it happens, then you see if the surge marker is still present. So whenever you see surge coming in on a 5 minutes bar, that is an indication of abnormal activity happening in that particular candle. Any questions so far? So one way of using it, one method of using it is that you mark the high and the low of the search bars, because this area, now when I look at this bar, when I look at this particular bar, you see that the high of the bar has never been breached today. Every time price starts rebounding, the high of the bar is where the price takes a rejection. Clear? So one way to do this is to mark the high and the low of surge bar and look for price movement in that particular range for you. Again, I repeat this, there is no single tool that you can simply open at 9:15 and then decide आज मैं buy करूंगा, आज मैं sell करूंगा. This is a tool to analyze the data which is coming into the markets. So you need to use it accordingly. Okay, you need to use it accordingly. Surge, as well as I said, surge bar indicates a high amount of volume based activity in that particular bar. It can either be the start of a new move or the end of the previous move. It can either occur at the start, before the beginning of a fresh move, or at the end of a current move. On this day, for example, you can literally pick any day, give it a few seconds to load. For example, if you see, this is where the markets opened at 9:15. At 9:35, I'm seeing a surge bar. You just identify the high and the low of the surge. You look at price reaction, no matter what kind of analysis you are using. Let's say that uh, you are a price based trader. You use simple price action or use pivot points. For example, you use volume profile. Be it any analysis that you use, you can incorporate order flow surge into it. Because if you look at this candle on an individual basis, for example, if I look at this candle on an individual basis, there is nothing that tells you that this particular candle is very important. But in the background, from a volume basis, a lot happened in this candle where a certain market participant has put pressure on other participants or has absorbed their volume. And you can see the implications of it in the subsequent up move. Clear? Say that I change my tick size to 100. Example, okay, and I'm using my imbalance charts. This was my search bar. Just a second, let me. 935 bar is my search bar. So if I look at my 935 bar, for example, footprint chart is indicating nothing special in my 935 bar. But then there something happened in the background. Something happened in the background that tells you that this bar is important from a volume based perspective. Settings back to 1. Any questions? Can you show some examples where it failed after this? One thing, Raghav, as I just said 3 times before this is not a tool where you can blindly buy and sell above surge or below surge. This is a tool that you use to decode market data, identify areas where abnormal volume is coming in, and then using your existing method of analysis, this gives you a huge added edge. Does it mean that it's 100% accurate? Absolutely no. There will be few times where it will go wrong, that's for sure. OF is locked on my chart. How to unlock? This is open for everyone. Order flow surge is open for everyone. It has a lock symbol and then you click on it. For example, the 1045 bar, after a large up move, you are seeing surge coming in this area, and for a good period of time, this is the area where market struggled. How is it different from power trades and imbalance? Power trades only gives you a certain volume based alerts. That is, let us say if you consider 1,000 lot trade in let's say within 5 seconds to be a power trade, that is what it shows. But it doesn't talk about, it doesn't compare with the opposite volume that is coming in and whether the pressure that is being put on is to a certain extent or not. Now, let's go to 15 minutes time frame, for example. You can literally pick any day and go to 15 minutes time frame. Whenever, for example, this was a sideways day where it was very difficult to interpret even using surge. This is on Wednesday. You have three surges, and this is on Thursday. Let me explain. Now, how do you use surge on 15 minutes basis? You can either use it, you can use it both on 5 and you can use it on 15. On 5 minutes bars, you use it as a tool to identify those price areas where from where the markets can give a strong move. On 15 minutes, if you see that, for example, take this example on 4th of December, you see on 15 minutes a surge bar 1 or 2. We'll look at quite a few examples. You see surge bar, you wait for this candle to close and the next candle to open before the surge signal is locked. Once you see that the surge signal is locked and you see that the markets are breaking the high and moving this way up, there is a very high probability that the low of the day is done. That there is a very high probability that the day low, I'm not talking about the surge low, I'm talking about the day low that the market printed will not break. There is a high possibility that it will not break. Now, how do you use this information? If you are an option seller, as an option seller, you can use this information on expiry day, for example, to sell strikes below the low, where there is a higher probability of them expiring worthless. If you are an option buyer, then how do you use this information? Say you wait for pullbacks to the area of the surge or to the day low area, and then you take high probable positions with a defined risk. As I said, it gives you data. How you use that data, it matters a lot. Take the day before that. This is only on 15 minutes. Remember that. At 10:15, I see a subsequent surge after a up move. And then the high of the day was not breached. 30th November, the opening candle itself is a 15 minutes candle is a surge bar and price is moving down. The high of the day got printed 47 44,776 was not tested on 30th November at any time. Anyone else? Any other questions? Does color of the candle matter? No, the color of the candle does not matter unless you look at it with the price area where it is moving. Any day, this is at 3:15. On some days, you simply don't get a signal at all. The same thing. In a sideways context, I am seeing three back-to-back surge bars that have been printed, and throughout the day, neither high nor the low got broken. So on these kind of days, these are those rare days where a trader using search will struggle to interpret what is happening, which is natural. There will always be those occasional days where you see that you are struggling. Now, 16th November, opening bar is surge, markets moved up consequently. When the surge candle high is broken, the day low is printed. The day low got visited right around closing time. You can literally use it on any day. I repeat, the key is you don't turn on spike. Spike is something totally different. We are not going to discuss that now. Only search should be turned on. Let's look at a few examples in Nifty. For example, today there are a lot of signals. For example, after 2:30 in 5 minutes, in case of Nifty futures surge, and market moved neither up nor down after 2:35. This actually tells that this is an area, this is a zone of super high volume activity, and this is an area that we need to watch out. So any gap down or any breakdown from here, there is a higher probability of the markets moving lower. These are simple trending days. Doesn't matter whatever you use. If people are staying on the day side of the trend, they will make money on these kind of days. They don't come in usually once in 2 3 months, but it is what it is. 15-minute surge. You can even use it on Nifty, for example, here at 9:30, surge was printed and then market started coming down. The high of the day was never visited there. As I said, there's a high probability that the high of the day is done and will the market will not make a new day high during the day. Any questions? So right now this is a proprietary indicator which I have built, but this is literally open for everyone for the next 30 days. Okay, so feel free to use it. This video will be uploaded on YouTube as well. I'll update in the Discord and Telegram community once it's done. So feel free to watch it, use the tool, learn how to use it. Let me know if you have any questions about it, and after 30 days it will be locked behind a paywall. So I will share further details of how to subscribe for it. The first 20 to 25 subscribers will have a special pricing plan which I will share upon request, but for now, as I said, it is complimentary and available for all. So you can use it, monitor it for a few days, and then build confidence and give yourself a strong edge with it. Power is not based on volume, it's based on the time and sales, which is incoming bids and asks. Please address its imbalance. Power trades is based on incoming bids or asks, right? What is how does it matter? Let's say a large number of bids are being hit within an X number of seconds. If those bids are getting filled, it implies that those trades are in place. Those trades are actually getting executed. If not volume and orders, what other parameters you have considered in? There are quite a few parameters that went in it. And see, when I say volume, it doesn't simply mean buy volume, sell volume. There is a lot behind the curtains when we talk about volume analysis that have been considered in building this. Can we use this on stocks? Definitely, you can use this on stocks, but that will be covered sometime later. I hope I have addressed all the queries. How to reach out to you? You can reach out to me on the Discord community of Go Charting, or you can reach out to me on Telegram. I will be available on Discord. I'm sure that most of you are on Discord. So, or in my personal Telegram ID will also be shared in the Telegram community of Go Charting, so that you can reach out to me. Anyone else? Any other questions? No queries? All right then. Thank you all for attending this session. We'll be having similar sessions in the future. Okay. So do let me know if you have any questions. The modes of communication will be shared. Thank you all.